What's up, Mac?
Hi, Mac. You're the founder of Project Zero, the first DeFi-native prime broker. Sounds like you have a bit of a history in the trading world and the health tech world. So I'm curious if you could kick us off. I mean, what the fuck is a DeFi-native prime broker, and why are you the man to go build it?
Yeah, it's a great question. So there's lots of DeFi products that do different things. There's perps, there's swaps, there's lending, there's launchpads, there's stablecoins. And most users I know, I'm sure most users you know, don't just use one of these, right? They tend to use multiple. They use perps exchange for perps, and they use lending for lending, etc. So the immediate problem they run into is that if they have $100 on the perps exchange and $100 on the lending exchange, and they need to borrow money, they need to pick which exchange they want to borrow from, which asset they want to collateralize, and they only get to borrow against half their portfolio. Now multiply that by 3, multiply that by 5. Now they're only borrowing against a third of their portfolio, a fifth of their portfolio. But they have, $200 in this case, or maybe a lot more across different venues. So what Project Zero does in a nutshell is, if you have money across 2, 3, 5, 10 venues, we can let you borrow against the entire portfolio in one click. And yeah, that's why we kind of need that. Yeah.
All right. So, I mean, if I think about a prime broker, there's actually a lot of other services that a prime broker will traditionally do. Is the game is your plan just to sort of aggregate liquidity here, be a more effective sort of trading venue here, take fees on that, or are you actually going after the full stack of what a traditional prime broker will?
Yeah. So we want to lean in heavy to the stuff DeFi does good at, which is a lot of like permissionless and trustlessness are like two top of mind things for that. And so our prime broker functionality is permissionless and trustless. So we're starting with DeFi venues, and we're starting with like the DeFi user, because the DeFi user has kind of been neglected. At this point, we have pretty established venues that a lot of people tend to have money across. Like we have Hyperliquid, we have Aave. There's a bunch of venues on Solana like Drift and Camino, etc. These offer differentiated use cases. They got staying power. They're not going anywhere. They have really good risk-adjusted profiles. They've been through a lot of like market conditions. And so this is where we're starting. Like we can start to underwrite, we can start to originate credit against multiple venues, given, their history and their staying power, and, essentially their user demand. And then from there, we can then start to, potentially look off chain, but we're very focused on chain first. The structure itself can go anywhere. So like I've mentioned Hyperliquid, I've mentioned Aave, and then I've mentioned Solana venues. The credit and risk engine is built on Solana. It's got over $200 million in it already. It's got over $100 million borrowed already, pre our second venue, which is Camino, which goes live October 8th. But we can go anywhere with this. We can go to Hyperliquid, we can go to Aave. And then the next step, the off-chain step, would probably be starting to look at like centralized exchanges, but that's so far out of the picture at this point. There's a lot of ground to cover with DeFi, and this is constantly evolving. So there's going to be new venues every week that we got our sights set on.
Weekly new venues. I mean, what a time to be into it. We love it. Okay, so I mean, you've tweeted that competition is for losers. Get out there and be different. Are you the only guys going and doing this? Like, this seems like a very obvious sort of market to go after, obvious problem to go after. How are you being different here?
Yeah, we're definitely extremely differentiated in this functionality. I can't tell you, the minute our second venue goes live, or we'll make history. That'll be pretty cool for DeFi, and that's pretty hard to do in DeFi, right? Like finance is a pretty tough field to innovate in.
So, what's the hard thing here then? If obvious opportunity, nobody's done it. What have you actually figured out?
Yeah, there's a few things. So one, if you wanted to do this before, you would have had to pick venues with staying power, and you would have had to like weather through a bunch of as smart contracts got more mature, and there was a bunch of like smart contract risk, there was a bunch of credit risk, there was a bunch of like financial risk, and you would have to de-risk all of these things, and you'd also have to choose the venues before that would have lasted greater than a year. which, previous in DeFi, that didn't happen a lot, right? Like that was kind of like a minefield. Now, however, we've clearly turned the page. Like DeFi is very much maturing. Again, a lot of venues have staying power. We've been through a bunch of like past hacks and exploits, and we've also been through a bunch of past like quantitative and financial exploits as well, like not just on the smart contract side, where teams are really, really prepared. They're very mature. And so we have the ability now, we have the confidence to start underwriting credit against venues outside of our control. And so this is a very methodical process. This is a very like risk heavy process from basically like 3 levels, from like smart contract security, from financial risk, and then also just like market risk, and essentially like choosing a venue that we know is going to be there in the future. But we can confidently do that. We can confidently do that with like our second venue, which is Camino. We can confidently do that with a venue like Hyperliquid. We can confidently do that with the Aave. And so now, like, since we've turned that page, this kind of evolved. This opportunity opened up. It wouldn't be opened up if we were still in this stage where everyone's sort of like fighting for their corner of the market, and we don't know who are some winners yet.
Yeah. So who's this for? Like, is it for JD? Is that who, it's a guy who runs a fund, or is that for me who has, because I have all these assets all over different places. I'm not the deepest trader, but I mean, if you can unify anything for me in crypto,
yeah. So my like philosophy here is, if you looked at users as like a bell curve, we're on the left and the right side of this. So we're on the left side.
That's where you want to be in crypto, baby. Yeah. Get out of the middle.
Yeah, exactly. So on the left side, like, I don't mean that in any sort of like controversial way. I just mean like passive yield farmers that want great yield, great risk adjusted yield, but then constantly run into capital fragmentation. Like they have their money on 3 different venues. A trading opportunity comes up on Solana, and now they can only borrow against like one of those venues and have to individually manage that, or 2 of those venues and now have to manage 2 positions at once. And, they run into liquidation risk, etc. So those users, that are looking for passive yield, and when they want to borrow, they can borrow against their whole portfolio. And then on the right side, this is like a superpower for really sophisticated DeFi users. So like, if you're like, a really good example is, let's say you have a delta neutral position between 2 perp venues, and you're like long sol perp on venue A and short sol perp on venue B, right? Now, historically, if the market moved up, you'd get liquidated on venue B. Venue B has no idea you have an offsetting position on venue A, right? Now you don't. Now, like, we can holistically provide credit and risk parameters based on your entire portfolio. Your margin can be automatically rebalanced. And actually, you'll be able to borrow more against the combined position than you would be able to borrow against either individual position, because either individual position is much more riskier than the combined position. So that's like an easy delta neutral example of like something a sophisticated user could do. But you could get into like a bunch of like market making use cases. You can get into a bunch of like spot derivative use cases. And yeah, a lot opens up now with like better capital efficiency.
Yeah. How do you see, like, it seems like there's a net additive service to kind of existing people within this space. Like, do you see any pull, I'd say, from like more traditional markets, that this starts to become a lot more entertaining for them to be able to participate and leverage, more so than what they could do prior?
Yeah. I mean, what you see is a lot of, like, from the traditional markets POV, you see a lot of like capital starting to trickle down in like 2 distinct buckets, I think. One is, I just want exposure to this asset class. So that manifests as like, I just want to buy Solana and I want to like stake Solana. But if I'm doing that in any way on chain, can't borrow, like that capital is locked up, I'm done, which is extremely capital inefficient. You see, the second bucket is, institutional people are looking at this and like, wow, there's a lot of inefficiencies here. There's a lot of like very easy alpha. And so I'm going to like set up a special purpose entity that can maneuver much better in DeFi, and can sort of use the full extent of these protocols. And so we serve both of those. Like, anyone who has LSTs across multiple venues or any sort of like native stake. We actually also pioneered something where you can borrow against your native stake on Solana. That's live on one of our applications right now. But anyway, yeah, like if you have LSTs on different venues, if you have native stake, we can let you borrow. Or if you're a prop firm that's sort of incubated by, you know, a big market maker, a big like financial firm, you can sort of maximize like the use of like a lot of these perps exchange, these lending exchange, these stable coins, etc.
So we'll have to step it up a little bit here on the macro. You're building a business here. I'm curious how you were thinking about building enterprise value here. Is this something that you're going to IPO in the future? Is there a token that comes out in the future? How are you thinking about that?
Yeah, we're a super DeFi native team. So like we want to tokenize this. We see a lot of value in tokenizing this. In fact, like the minute we launched Project Zero, we put out a blog post and sort of like talked about how we're thinking about tokens. And we're actually going to have our first like community discussion on October 15th about how we're thinking about tokens, and just be like very transparent about this.
Can you give me the TLDR?
Yeah, the TLDR is the way we're initially thinking about it is 5, like, you know, everyone likes the pie chart, 5 20% buckets. Bucket 1 is initial distribution. Bucket 2 is like, you know, future user like incentives, which we can be really flexible on. Bucket 3 is like foundation. So we're already at like 60% that's like user owned, right? And then buckets 4 and 5, 20% each is team and investors. So that's kind of how
the breakdown is maybe the least interesting part about a token model.
Yeah.
Though. Like what is sort of the value flow? Like how are you sort of seeing the token being useful here?
Yeah, we have actually some like really cool ideas here. We will like start to roll out these ideas on October 15th, but this is going to be very non-traditional. One like Easter egg I can definitely give is I think there's one really successful token model. Well, there's actually 2. Like one is we're seeing like buybacks be really effective right now. So you can't ignore that. But another one that we kind of just like gloss over is like gas tokens. Gas tokens are really effective. Like Solana's a gas token, Ethereum is, etc. And no one's really done that at the program level, the DeFi program level. We have some ideas about that. But yeah, I think we'll be really different here as well.
That's good enough of a breadcrumb to get me in here. Maybe the last question. Give me your hot take on the base token. Announced yesterday. You bullish, you bearish? Is that something you want to a buyer on day one? Obviously, a lot of information not out there, but what's the hot take?
Well, I think if base is looking to be a decentralized L2, they need to make more progress on their decentralization roadmap before that token makes a lot of sense to me, at least. Which I hope they do. I'm rooting for them. You know, I think decentralization is the better product than like centralization. That's why, you know, we kind of operate the way we do. So yeah, I'm like rooting for them, and I hope they get past like stage 1, essentially. Yeah.
MacBrennan, appreciate you hopping on today and giving us an early look. I think October 15th is coming up sooner than I think we all would desire, frankly.
Yeah.
So maybe we can check in with you after that. But yeah, thanks for sharing your vision, and best of luck as you.
Thanks for having me. Really appreciate it.